$5 disaster. Every week, I hear from retirees who got that letter. And almost every time, the story goes the same way. They see the number, they feel the gut punch, and then they do something completely understandable. They accept it. They think the decision has been made for them. But here's the truth: that letter wasn't a decision, it was a test. And the system was watching to see if they'd walk away. Here's what that letter actually says: your income is over the limit for one specific program. That's it. That's all it says. It does not tell you that two more programs exist above that limit. It does not mention the $20 disregard that could bring your income back under the line. It says nothing about the assets the state is forbidden from counting against you. It just says denied. And to the computer that generated it, that's the end of the conversation. You are either eligible or you aren't. No middle ground, no nuance, no exceptions. Every person who folds that letter up and accepts it is, from the system's perspective, a successful outcome. But the people collecting partial benefits right now, the ones at level 2 and level 3, they're the ones who didn't accept that letter as the final word. That denial isn't a closed door. It's the dimmer switch at its lowest setting. And there are two more notches above it. And here's the part that makes retirees angry when they discover it: the people getting those benefits aren't necessarily poorer than you. In some cases, they're only a few dollars away from where you are right now. Chapter 2: The 3 Levels. Let me show you exactly what this looks like, because once you see it, you'll understand immediately why that denial letter is so misleading. And you'll probably ask the same question thousands of retirees ask every year: why wasn't I told this in the first place? There are 3 levels of Medicare Savings Programs, 3 separate thresholds, 3 separate benefits, and not one of them is mentioned in the letter that says you're over the limit. Here's the part nobody explains: missing level 1 does not mean you miss all of them. You could be over the limit for full coverage and still fully qualify for a benefit worth over $2,000 a year. The tragedy isn't that people don't qualify, it's that they stop checking after the first denial. Level 1: the Qualified Medicare Beneficiary Program, QMB. This is the dimmer at full brightness. It covers your Part B premium, your deductibles, and your copays. If you qualify here, your out-of-pocket Medicare costs drop to nearly nothing. This is the level most people have heard of, and the level most people assume is the only one. It isn't. Level 2: the Specified Low-Income Medicare Beneficiary Program, SLMB. Higher income threshold than QMB. It covers your Part B premium specifically. In 2026, the standard Part B premium is over $200 per month for most beneficiaries. For a couple, that can mean hundreds of dollars staying in your household budget every month, thousands of dollars a year, from a program most people never apply to because they assume the first denial closed every door. Level 3: the Qualified Individual Program, QI. Higher threshold, still, also covers your Part B premium, but this one is different from the others, and if you qualify for it, you need to move fast. It's funded first come, first served. Think about that for a moment. Two people can qualify for the exact same benefit. One applies in January and gets it. The other waits until later in the year and gets nothing. Not because they weren't eligible, because they waited. The money runs out every year, not reduced, not delayed. When it's gone, it's gone. Anyone who qualified but didn't apply in time waits another full year. 3 levels, 3 thresholds, all of them sitting above the number on that denial letter. Now, here's where most people make the second mistake. They look at those thresholds, compare them to their income, and decide they don't qualify. But the income figure they're using is almost certainly wrong. Chapter 3: the Asset versus Income Trap. This is the part of the conversation where people get quiet, because this is usually where they realize the denial letter wasn't the real problem. The real problem was that nobody explained how the numbers were being calculated. Because when I walk someone through the correct calculation for the first time, the reaction is almost never surprise. It's frustration. Quiet, slow frustration. Because they realize they've been running the wrong numbers for years. And it's not their fault. Nobody told them there was a different way to count. Let's start with income. In many Medicare Savings Program eligibility calculations, certain income disregards may apply. One of the most common is a $20 monthly income disregard used in many situations. That's one reason it's important to have your eligibility reviewed rather than assuming the first number you see is the final answer. That $20 comes off the top before any comparison is made. It's called the standard disregard, and most people applying on their own never subtract it. $20 doesn't sound like much, but if it's the difference between being $15 over the threshold and $5 under it, it's the difference between a denial letter and $2,000 a year. Now, on the asset side, the rules are even more generous than most people expect. Your primary home cannot be counted. One vehicle cannot be counted. Personal belongings and household goods cannot be counted. And depending on your state, a wedding ring may be excluded too. What this means is simple. Someone who looks at their income, decides they're over the limit, and stops, may actually be well under it, once the correct numbers are used. The number that matters is not the number on your bank statement. It's the adjusted number, the real number. And for a lot of people watching this right now, those two figures are further apart than they realize. Let me show you exactly how far apart, with a real person. And when you hear her numbers, don't focus on Mary. Focus on how easily this could be you. Chapter 4. Mary's $18 mistake. Let's look at an example. We'll call her Mary. She's in her early 70s and lives in Ohio. She got the letter. She was $18 over the income limit for her Medicare Savings Program. She did what most people do. She accepted it, adjusted her budget, and kept paying her Part B premium out of pocket every single month. Over $200 every month. Because she believed that letter. When we sat down together and went through her income the right way, the first thing we did was subtract the $20 standard disregard. Then we looked at her supplemental insurance premium, which qualified as an additional deduction in her state. Two adjustments, both completely standard, both completely legal, neither one complicated. She wasn't $18 over. She was $2 under. $2. That's all that stood between her and thousands of dollars she was entitled to receive. The difference between paying $175 a month and paying nothing. Between thousands of dollars a year leaving her account and staying in it. Over 5 years, more than $10,000 from a benefit she was entitled to the entire time that a single letter convinced her she didn't deserve. I've had this conversation more times than I can count. Different names, different states, different numbers, same story. Someone believed a letter that wasn't telling them the whole truth. Now you know the whole truth. So let's do something with it. Chapter 5. Your eligibility workflow. Here's what the next hour of your life could look like, and why it might be the most valuable hour you spend this year. 3 steps. Free. No experience needed. You can do this yourself, this week, from your kitchen table. And if you're worried this is going to involve forms, lawyers, or hours on hold, it doesn't. Step 1. Find your gross monthly income. Not what hits your bank account, the pre-tax figure. If you receive Social Security, it's on your award letter. Take that number, write it down. Then ask whether any income disregards apply in your state and situation. That's the number you'll want to compare against program guidelines. That is your countable income, the actual number that matters. Step 2. Search your state's name plus 2026 Medicare Savings Program income limits. The thresholds are publicly available, updated every year. Compare your countable income against each of the 3 levels: QMB, SLMB, QI. Step 3. And I want you to pay close attention here, because this is the step most people skip. If you are within $50 of any threshold, above or below, do not try to figure this out alone. Call your state health insurance assistance program. It's free. The counselors are trained specifically for this. And when you call, use these exact words. I'd like help determining whether I qualify for a Medicare Savings Program, including any income disregards that apply. That sentence tells them you know what you're asking for. It changes the quality of the help you get immediately. 3 steps, about an hour, and potentially $2,000 or more per year sitting on the other side of it. But before you make that call, there's one more thing you need to know. Chapter 6, the warning. The moment you start looking into Medicare savings benefits, something finds you. And unfortunately, not everyone who finds you is trying to help you. It arrives in your mailbox. It shows up on your phone. Free Medicare benefits. Find out what you qualify for today. It looks professional. It sounds helpful. And it is targeting you specifically. Some of these are legitimate, but some are consultants who will walk you through this exact process and then send you a bill or take a percentage of whatever you save. So I want you to hear this clearly. You never pay for this information. Medicare savings programs are public benefits. The SHIP counselors are free. The application is free. The thresholds are public. Everything I've shown you today costs you nothing to pursue. Anyone asking you for money to access these benefits is not offering you a service. They are charging you for access to your own money the system already owes you. The real help exists in every state, right now, at no cost. You know what it looks like. You know what the alternative looks like. Protect yourself accordingly. Chapter 7, your 48-hour action. You now know everything you need. The 3 levels exist. You know how to calculate your real countable income. You have the 3 steps. You know what to watch out for. The only variable left is you. Whether this becomes something you act on this week or something you meant to look into and never did, because information only changes your life when it becomes action. I've watched that happen too many times. Good people, real money, good intentions, and a video they bookmarked but never followed up on. I don't want that to be your story. So here is your one task for the next 48 hours. Find your Social Security award letter. Subtract $20 from your gross monthly income. Look up your state's 2026 Medicare Savings Program thresholds. Compare. That's it. 10 minutes. If you're within range of any level, call your SHIP line this week. Search SHIP Counselor and your state name. The number comes up immediately. The call is free. The help is real. Don't let a $5 figure on a denial letter cost you $2,000. You worked 40 years for that money. Don't let a $5 technicality decide who keeps it. Go get it back. Now, if you've just realized you may have been missing Medicare savings benefits, I want you to consider something. The same system that didn't volunteer this information to you, it also didn't tell you about the tax credits the IRS created specifically for retirees in your situation. Most people I talk to have never heard of them, not because they're complicated, not because they're hard to claim, but because most tax preparers don't apply them unless you know to ask. And most people don't know to ask. In the next video, I'm going to show you exactly which senior-specific tax credits exist right now, who qualifies for each one, and the single question you need to ask your tax preparer before you file this year. Some of those are going to surprise you. Until then, take care. See you in the next video.